Hello guys, welcome back to another lovely trading video. In this one, I'm going to be doing a breakdown on the overall market, meaning the S&P 500 and the NASDAQ, to see where most likely the market is going to be going, our price targets, buy locations, and all of that. So firstly, just before we get into the analysis video, in case you haven't seen the previous one we did on the market, it was about a month or two back now. Just wanted to show you that these targets are accurate. So if you use Think or Swim, you can see the date that you placed each of these support resistance charts. Also, you can go back to the video and make sure that these were accurate. But on September 14th, we plotted these support lines, and you can see that that's literally where the bottom of this move was, and you can see that September 20th. So we gave these targets on September 14th, so when the S&P 500 was here, then it ended up being its bounce level. Same thing on NASDAQ. If we go to this quickly, just so you can see what I'm talking about. The bottom of the NASDAQ right now was October 4th, and if we go on here, you can see we plotted this on September 12th. So just show you these levels are accurate, they're not just made up or whatever. You can go back and check the previous videos if you want to see how these levels are coming in. But again, basically we can clear these now and go over how we find these support levels, and also how we'll find these price targets if it looks like the market's going to continue up, which as of right now does look like that's more likely to be happening. So firstly, we usually look for gap fills. If you watch our normal stock analysis videos, we look for gap fills. However, if you're using the SPY ETF or the QQQ ETF or the NASDAQ, you may get the occasional gap, but I prefer plotting off futures. The reason being is they trade more hours, and more people tend to be looking at it more people tend to be looking at it if they're looking for the overall market. So futures is what I tend to stick to when plotting these support and resistance lines for the overall market, and you don't tend to really get any gaps on the futures market. So we don't tend to do any gap fills when looking at the overall market, and instead only use them on individual stocks. So when we're using just the overall market and using futures, it means we just stick then to the standard deviation channels, which work perfectly enough. So all we really need to be looking at is kind of the first deviation and statistical mean. The reason for that is markets don't tend to trade outside of these levels very often. The reason for that is, well, with standard deviation anyway, the majority of the data stays within these orange bands, and then unlike an individual stock, even if there's large news catalysts, for example on Tesla or Facebook or something, it's not going to affect the overall market enough to kind of bring it out of the kind of like a statistical mean area. So that's kind of the easy way to looking at it. So majority of the time when we're looking at markets, we're only really looking within these first deviations. Occasionally, like back in when the pandemic started, I think it was the April or March low, then that's the only time you really tend to see it coming out of these barriers. And I think when it was 2020, I think it would have came down to like the third deviation, but doesn't really trade outside of then. A market index, so I mean whether that's Bitcoin, S&P 500, NASDAQ, Dow, FTSE, the DAX, whatever you're looking at, if it's an overall market index, you tend to stay within these deviation bands. On the usual stock or individual stocks, you do all the time anyway, or the majority of the time. But on market indexes, it's even more strongly within these, and it's very unlikely that you see it going down to the blue or green line, unlike individual stocks where you tend to see them going to those levels a bit more often. So just wanted to get that out of the way, and now we'll go straight into the levels. So as we can see, we kind of have these key levels at, well, we're going to plant these back at where the first deviation is. So it basically just means if the market starts pulling back down, this is kind of the level of support we're looking at. The difference is, and for some reason it's not copying over to both charts as it should, so we'll quickly plot this on this chart as well. So when it comes into this, back into these levels, you can see we've already tested it. So that's one thing to be looking out for, because unless it comes back into, let's plot this here as well, unless it comes back into the statistical mean, we don't rebuy when it comes into the first deviation. Even though it's a market index, it is still very likely to be bouncing at that area, but we are taking unnecessary risk if we're coming into here. But these are still areas where if the market does pull back down, a lot of buying pressure will be coming into these zones. So the only time, majority of buying pressure will be coming into this zone, and it would be very unlikely to see it break below that level. But if it did break below there, where would we be looking to buy? And that would be around $4,120. But again, very unlikely for it to kind of break out of these levels. Obviously, at some point you are, when the market does have a strong reversal, unless what I guess can occasionally happen is it just stays within the low bands of the deviations, and then over the year the deviations will move downwards and instead have lower targets. But for the majority of the time you tend to just have an unexpected turn, and then selling pressure will come in quite likely. So these levels will work, let's say 9 out of 10 times, until the market has a very large pullback and or a reversal. But as of right now, we seem to be good, and we can keep taking trades at these levels. And even if you're not trading the future or even the market index overall, they're good to be knowing, because if you're trading individual stocks, it's good to still kind of understand where the market's going, because it could help you on your other trades. So yeah, basically right now we have a target to 4,540 to around 4,580. So this is statistical mean. So we want it to come into here before we can either see it going up or down. So for now, that's our main target. We don't really see it pulling back to its low before then, and we instead see it going there. Reason for that is markets, or stocks and or markets, tend to trade to extreme. So when it pulls back quite heavily, if you're trading within the standard deviations, you expect it to come back to this statistical mean relatively quickly. So that's what we expect to be seeing now, a price target of at least 4,540. When it comes into here and between the kind of 4,590 level, here it'll probably just kind of consolidate. But what you're looking for is where the stock goes after. If it breaks through, closes above with strong kind of buying pressure, then we would have our target of around 4,700 all the way up to around 4,900, which would be the first deviation on the daily. Obviously these are quite far off targets, and from where we are now, that would be a 6% and a 9% respectively increase, and from the all-time high that would be around 4.5% and 7.5%. So these are achievable, especially in a market as volatile as we are now. But kind of the 4,700 would be the key one we're looking at now, because obviously as well standard deviations change every so often, so it's good we would have updated targets when the market gets to that kind of level. But yeah, the key level to be looking out for is this statistical mean level, so around 4,540 and 4,580. Because we usually, when stocks come in statistical mean, they either get a strong reaction to the upside or downside. You don't know what level or what way it's going to go before it's coming into there. It's really a gamble. So instead you wait for that reaction, and then you tend to get a strong move either way. For example, I mean, you can even see the most recent push we've had in statistical mean. You either come in, get a strong bounce off, or you come in and you get a strong sell off. Again, that usually happens 9 times out of 10, or around 8 times out of 10 when it comes into statistical mean. So that's exactly what we're looking for on the S&P 500. It's either it will come in and push back down to kind of this low, or we would be waiting for a quick push up to kind of the 4,700 level. So those are the key levels that we're looking at on the S&P 500, and we'll quickly go over the NASDAQ, because obviously you kind of look at both when looking at the overall market, and if you're trading more tech heavy stocks, then the NASDAQ's usually the better one to be looking at. So with NASDAQ, we got the same kind of levels, and we can see they actually line up a bit, or the statistical mean lines up very closely on both charts. As you can kind of see, they're both around the $15,450 level. So the same thing we're looking at with NASDAQ now. It looks like it's going to continue up, so this will be our key level of where we either kind of shoot and continue up, or we get a strong pullback off that level. You don't tend to consolidate on that level. Now if it pulls back, where are we likely to see it bounce? Well, we're likely to always see some pressure at these buy zones, but again, we've already touched these, so unless we touch the statistical mean, then we don't touch these zones again. So if we don't touch the statistical mean, where would our buy zone be? and that would be the next lowest or next closest full deviation, which in this case would be $13,750. So yeah, if we can't push up to $15,450, then our buy zone would be $13,750. But if we do continue up, then again these levels become efficient again, and we would be looking for a target of around 16,300 all the way up to around 16,600. So overall, I mean, the exact same breakdown on NASDAQ on what we expect the reaction to be, but we'll just give you the levels on the NASDAQ, and there they are. So that's it for the breakdown on the overall market. I hope you enjoyed the video. Hope to see you in the next one, and that's it. Peace.